All right, so I'm gonna do a little more of a complex strategy here for you guys. This is on Intel, and Intel has got downgraded again. It's gotten crushed. It went from 68.50 all the way down to 24.50. Lost tons of market cap. But we are in a little uptrend here, just a tiny one. We pushed over 32 here recently, which is good. It's taken back some of these levels, but you would to find these levels you would have to go way back. This is as far as the Thinkorswim goes. You would have to go way back to find these levels. So I'm going to do a little more complex strategy. I'm going to show you guys the last year of trading Intel. So I went back all the way to August. They only let you go a year back. So here's my year. And I started messing with it back in August at 35. This is of 2022. And you can see here, collected a cover call. Then it triggered. Then did another cover call at 50. So those shares were from before that I got stuck with. And then I started messing with it at 32. Again, got stuck with more shares at 32, and then I've been holding on to shares ever since uh, September 6th of 2022 at 32 and at 50. So there's the 50 right there. So let's see what I've done. So I've sold cover calls, bought them back, sold cover calls, bought them back. I bought more shares here at 27, then got rid of them, bought more at 26, then got rid of them, sold some covered calls on them, got some dividends on, this is dividends on 300 shares. And then right here recently, I bought a call. I bought a call here and then sold it for more than double and then got the dividend. So this has been a year of wheeling on Intel. And so let's take a look. I put this in a spreadsheet. I just downloaded it. So my positive cash flow, or my my cash flow is negative. It's 24.48, but I have 200 shares with the average of 41.76, and those are currently worth 6,285. So the way I look at this is I have $6,285 worth of shares, and it only cost me $25.48.95. Okay, but these shares are currently down 2,000 based on this cost basis. This is the $32 shares plus the 50. So I got 6,200 in stock for only 25.48, and that's the power of the wheel. Now, what do I do with this? I don't want to be stuck with these shares all day. So this is what I'm going to do. I got the 32 shares and I got the 50 shares. Okay? Those are my prices. It's currently trading at 31. I could sell a covered call for 32 and leave the 50 alone and get some nice premium a couple months away, or this month actually. But then I still got my dumb $50 shares. Now what am I going to do with that? If you remember, my cost basis is only 41 for the 200 shares. So this is what I'm going to do. My oldest shares are September, or my newest shares are September of 2022, which means anytime after September 2023, it's long-term capital gains, which is good. Or long-term losses as well. So if I go out after that, December 15th, and instead of looking at a 50 call and a 32 call, let me just do my cost basis, which is 41. Because remember, I got the shares, because of the wheel, I got the shares only at, it only cost me $2,500 to get $4,100 worth of shares. So let me sell 2 covered calls at 40. Okay, 2 covered calls at 40. That's close to my cost basis of 41. Okay, then I get $170 in premium. Now, if this triggers at 40, I'll take a $10 loss on the $50 shares per share, but I'll make $8 a share gain on my Intel or my 32 shares, and those will offset each other. And so I'll show a net negative of $200. But remember, I wheeled it for an entire year, and I got out of the position, got out of a very bad position at 50. If this triggers, because I lowered my cost basis using the wheel and buying in low. So let me confirm and send this, collect some additional premium, and hopefully by the end of the year, I'll be out of this bad Intel position at 50. And that's how you do it.